2022 may not have been a good year for stocks, but it was a terrible year for cryptocurrencies. The S&P Wink with tongue sticking out 500 is expected to end the year with a 17% loss, continuing this year's long losing run for stocks. The situation for Bitcoin and other popular cryptocurrencies is significantly worse. BTC is currently down 64% on the year, while ETH is down 66%. The majority of other significant altcoins are down more than 90% as the risk curve is extended. Before we reveal more interesting facts, subscribe to our channel now. Do you remember when the Federal Reserve held interest rates at zero, and inflation was only temporary? How much a year can change? Bitcoin, BTC, was approximately $48,000 and Ethereum, ETH, was worth over $3,800 in January 2022. The Fed's fight against inflation is mostly to blame for the dramatic decline in both of these top coins. But not just. Losses shouldn't come as a surprise to anyone because the past year has been littered with crypto meltdowns, bankruptcies, and upheaval. The affluent chaos of the ciphers and the arc offlower thought the .aatevar. What time frame does the crypto winter have? Cryptocurrency has experienced boom and bust cycles before. A brief glance at Bitcoin's price development, the industry standard, illustrates the point. BTC plummeted 84% to $3,000 in 2018 after a spectacular rise to around $20,000. In November 2020, BTC reversed course and climbed to about $17,000 before surging even higher. BTC saw a 50% decline in May 2021 before rising to all-time highs of about $69,000 later that year. Many observers think that current retreat is unique because of the difficulties facing the larger economy. This time, the current crypto winter may endure longer, according to David Kammerer, CEO of CoinLedger. That's due to macroeconomic factors, including political instability following Russia's invasion of Ukraine, increased borrowing prices, and inflation reaching 40-year highs. Since Bitcoin only came into existence in 2009, during the Great Recession, crypto market downturns have not previously coincided with a bear market in the broader financial sector. From 2009 until 2021, the financial markets experienced a protracted bull run that was only briefly halted by the COVID-19 pandemic slump in early 2020. In fact, this year's stock market opening was higher than a startling 7 times from the lows of March 2009, which occurred just 2 months after the birth of Bitcoin. But the stock and cryptocurrency markets have been hit hard by the simultaneous headwinds of high inflation and Fed interest rate hikes. When interest rates increase, risky assets like stocks and cryptocurrencies suffer. This is so that assets at the extreme ends of the risk spectrum suffer the most from increased interest rates, which drain liquidity from the economy. The value of IT stocks is declining due to the same factor that is harming cryptocurrencies. The worst hit companies are Apple, 22%, Netflix, 52%, and Meta, 67%. You must comprehend how long sustained high inflation will maintain the Fed's aggressive monetary policy position in order to respond to the question of how long the crypto winter will persist. The only things that can assist cryptocurrency right now are decreasing rates and easing inflation. The previous bear market lasted for more than 2 years. The financial environment has substantially worsened in just the first year of this one, according to Nick Saporano, CEO of Defi Labs, a company that offers decentralized payments. Forecast for Bitcoin in 2023. The price of Bitcoin is roughly $16,800 towards the end of the year, down from about $19,500 on the eve of the FTX crisis. BTC has additional room to fall if the effects of FTX's bankruptcy continue to spread. Even the well-known Bitcoin supporter Cathie Wood, CEO of ARK Invest, admits that FTX may drive major financial institutions to pull back from cryptocurrency in the near future. In a recent Bloomberg interview, Wood, who has maintained her BTC prediction of $1 million by 2030, said, "The one thing that will be delayed is potentially institutions pulling back and just saying, okay, Do we truly understand this? Another run downhill to the $10,000 mark for BTC in 2023 may not be too far fetched, given that wider markets are suffering and crypto's reputation has been severely damaged by the crises and scandals of 2022. Analysts at JP Morgan Chase and AMP Co. concurred that the bottom is not yet in, with a cascade of margin calls occurring across the market as a result of recent events. The bank estimates that Bitcoin's floor will be around $13,000. The cost of producing Bitcoin is another tool used by strategists to predict how low prices may go. The JP Morgan team wrote in a note that although the production cost currently stands at $15,000, it is likely to revisit the $13,000 low seen over the summer months. 2023 Ethereum price prediction. Ethereum normally moves in the same direction as Bitcoin, at least up until now. According to market capitalization, the Ethereum merge in September 2022 will result in a significant network overhaul for the second largest cryptocurrency. Some analysts predict that the price movement of the pair may soon decouple. According to Kemmerer, ETH is yet to profit in terms of value from the recently introduced proof of stake merging. The crypto winter is a contributing factor. Kemmerer thinks the price of the cryptocurrency might increase to $2,500 in the upcoming 6 months. Even if this is an extreme bull scenario, the same factors that influence Bitcoin's price also affect ETH. For upward gains to resume, the macroeconomic environment needs to be favorable. If it doesn't, Ethereum will probably decline much more. Given that the price of ETH fell below $1,000 in June, it wouldn't be unexpected if it rose back to that level during the following 6 months should additional unfavorable catalysts emerge. Others to watch in crypto in 2023. The situation for other speculative altcoins has been substantially worse in 2022 than it has been for Bitcoin and Ethereum. The effort of establishing credibility for many altcoins during the bull market has proven more difficult now that there is less market liquidity. Altcoins will keep declining as long as Bitcoin and Ethereum don't rebound. And many will completely vanish, much like bear cycles in earlier times. Even more intriguing is the case for stablecoins in 2023. In September, the cryptocurrency exchange Binance delisted a number of stablecoins, among them USD Coin, USDC, the fifth largest cryptocurrency by market cap with a $43 billion valuation. Soon after, Circle, the company behind USDC, declared that they would introduce a stablecoin backed by the euro on Solana, SOL, in the first half of 2023. Some observers believe that competition may soon increase much further. The rise of state-sponsored stablecoin projects, sometimes known as central bank digital currencies, is to blame for this, CBDCs. Even Turkey said that it would introduce a stablecoin the following year, and many other nations are expected to follow suit. China is one of them, significantly superior than the others. China's CBDC development has so far only affected small regions, but with wider adaptation in the coming year, that may change. Competition is getting fiercer for existing stablecoin issuers like Tether, USDT, Circle, and Binance. According to Richard Gardner, CEO of fintech business Modulus Global, stablecoins are really in a terrible place because there's little question that the introduction of CBDCs is going to eat away at their market. It is equally challenging to predict the market for stablecoins as it is to predict the price of Bitcoin. Cryptocurrencies like Ethereum are okay. Risk in the cryptocurrency market is still very high, that much is obvious. So subscribe to our channel and gain more knowledge about cryptocurrency.